Hey, what's going on everybody? My name's Jose from deepdatainvesting.com, and today we'll be going over how to analyze a company's financial performance via the income statement. Okay, so before continuing, if you haven't already, go to deepdatainvesting.com and subscribe so you can receive tips that can help you with your investing ventures. We just want to spread the knowledge. So we're gonna go ahead and jump into the computer, go to the EDGAR database, and take a look at some income statements. All right, we're back in the SEC EDGAR Database. And if you haven't checked out our last video on due diligence, go ahead and do that because we go into depth on how to search on the EDGAR database and what it is in general. So today we'll be looking at Microsoft's income statement. So Microsoft is MSFT. I'm gonna go ahead and search for the 10K, which is the annual report. And here we go. Take a look at documents. Go over to the HTML format. All right, so we're in the 10K form now. So let's check out the income statement. Now that's located in part 2, item 8. So let's go to that. Here we are, financial statements and supplementary data. Okay, so we actually reached directly to the income statement. Now let's take a deep dive into this. So when you take a look at an income statement, it might seem overwhelming at first, but it simply just reports a company's financial performance during a specific period of time. So it includes things like revenue, operating income and losses, and the net income. So we'll get into more detail with this. You don't want to miss any of this, so just stay tuned. So the first line we see here is revenue, commonly known as the top line. Revenue is directly associated to the income coming from the sales of product or service. So in Microsoft's case, we can see a breakdown of product and service, and then we have the total revenue of $143 billion. Now, whenever you're analyzing an income statement, it's important to refer back to previous years to see how well this company is growing financially. So if we take a look at 2018, Microsoft brought in a revenue of $110 billion. Then in 2019, $125 billion. Then in 2020, we get $143 billion, which is a pretty significant amount from previous years. Next, we have cost of revenue. Cost of revenue are any expenses directly associated to producing the product or service. So this may include materials, labor, or delivery of the actual product or service. So here Microsoft breaks this expense down by product and service, and then we get a total cost of revenue of $46 billion. This number is important to pay attention to because we want to make sure that this number makes sense relative to the revenue that the company is bringing. So in 2018, we can see that the cost of revenue was $38 billion, 2019, $42 billion, 2020, $46 billion. Next, we have gross margin, also known as the gross profit. Now, the gross profit is simply just the total revenue minus the cost of revenue. So in Microsoft's case, we have a total revenue of $143 billion minus $46 billion of cost and revenue, and we finally arrive to the $96 billion of gross profit. So from here, we can derive the gross margin percentage, which is the percentage of sales revenue available for profit after all the cost of revenue. To get the gross margin percentage, we simply divide the gross profit by the total revenue, and that's how we get the gross margin percentage. Now in Microsoft's case, they get a whopping 68% gross margin percentage. That is, for every dollar that comes in, they take 68 cents out of that. Next, we have operational expenses. These are expenses that are indirectly associated to producing the product or service, but are needed for everyday operations of the business. That's research and development, rent and utilities, or marketing. So in Microsoft's case, they break it down by research and development, sales and marketing, and general and administrative costs. That brings us to the operating income. The operating income is simply just the gross profit minus the operating expenses. So if we take the sum of those three operating incomes subtracted by the gross profit, we get a total of $52 billion of operating income. Below that, we see other income, which is like investments or things like that Microsoft has made that are outside of the sale of product or services. That if we sum those two together, we get the income before income taxes, which is $53 billion. Then we have the provision for income taxes, which is the expected amount of taxes that Microsoft is going to pay. So it's $8 billion. We finally arrive at the net income. The net income is the bottom line, which is the revenue minus expenses minus taxes. And that's going to give us the total profit. This could be distributed back to its shareholders via any kind of dividends or just reinvested back into the company. We want to make sure that we pay attention to this number. This will tell us how much profit the company is making, or if it's even bringing in any kind of profit. So in 2018, we can see that Microsoft brought in $16 billion, 2019, $39 billion, and now in 2020, $44 billion in net income. That's incredible. Now, I know I said the net income was the bottom line of an income statement, but income statements also come with additional information, such as earnings per share. So the earnings per share is simply just the profit minus dividends divided by the number of shares outstanding. What this tells us is how much this company brought in profit per each share of the company. Earnings per share has two lines, basic and diluted. Basic is just the overall number of shares outstanding, while diluted takes into consider the effects of companies, including things like stock options or restricted stock units in the company. So you could see that Microsoft brought in $5.82 of basic earnings per share and $5.76 of diluted earnings per share. To calculate these numbers, we use weighted average shares outstanding. Since shares are not always consistent throughout the year, we have to average these out in order to make sense of these numbers. So for basic, we have 7,610,000,000 outstanding shares, but with consideration to the diluted section, we have 7,683,000,000 shares. Whew, with that said, we're done with it, right? I know that was a lot, but this statement is super important in order to determine if the company is a good investment or not, along with other financial statements that we're going to be covering, so stick around for them. With the income statement, though, we can derive things like profit margin, operating margin, earnings per share, price earnings ratios. These are all important components that allows the investor to make a determination of an investment. That's it for now. Thank you guys for watching. Stay tuned as we're going to be covering the balance sheet and cash flow statements. So please subscribe, like if you liked the video, dislike, leave a comment on how you analyze a company's financial statement. Again, go to deepdatainvesting.com and subscribe. All right, that's it for now. See you later.